to ValeTalks by Valetax. Thank you for joining us this Monday on another episode. And in today's episode, we're going to be, enjoying ourselves as always, talking, looking at the market and also giving insights, teaching you, and making sure that you're way ahead of the market and understanding how the market works. Today's topic is a very beautiful one. We're going to be looking at market dynamics, buyers, sellers, and opportunities. If you notice my energy is a bit off today and a bit down, that's because I'm just recovering. I've been, a bit down with the flu. But thank you for joining and stay tuned with us. Today we're going to have with me my guest, my beautiful and wonderful guest, Kaza and Manesh, which I will be introducing properly at the next slide. So today, like I said, we're talking about market dynamics. We're looking at sellers, buyers, and opportunity. And this is episode 7 for ValeTalks. If you're just joining, please don't forget to share this link to your friends to come online and watch and also learn. We know the markets are just getting heated up in the US. And if you're in other parts in Africa or in Asia, it probably is the night time and it's probably the afternoon time for you in Africa and you're just getting involved in the market, the New York session. We know, and that is why this calls are always here to set you and guide you through the day for your trading as well. Okay, so today I'm introducing my guest with me. We're looking at Manesh and Sifu Kaza. Manesh is a global market strategist and educator. He's an engineer, CMT and CFT verified with over 25 years of experience in the trading. He's traded as a retailer, he's traded as an institution, and he's traded as a company for himself as well. He's worked with different institutional firms developing a black box system for trading, and he also was the author of Trading with Ichimoku Clouds. And I also have Shifu Kaza with me, who is the global head of education at Valetax, with over 11 years of trading experience, not just the global head of education, but he also has a doctorate in economics and trading. And he is the author of Navigating the Economic World by Shifu Kaza. Thank you guys so much for joining me today. I'm always happy and delighted to have you guys on the call because I know it's going to be an amazing time. Hi, Manesh. Hi, Kaza.
All
Hello, hello,
right.
hi.
Glad you're feeling a
I
little better.
I am feeling a little better. I hope that in the next 2 days I should be at optimum health. So at least I can get back to the gym because I know you've noticed, Manish, I haven't been in the gym in days now. But yeah,
Yeah.
so thank you guys so much for joining. And I would be your host for today. My name is Ryan Ifere. I'm a senior market analyst for Africa. And I like to describe myself as someone who always is willing and want to help people gain clarity in the markets. I have over 6 years of trading experience, and I am the founder of the Ryan FX Swing Trading Academy. And welcome to ValeTalks by Valetax again. If you're just joining and you're just joining us from wherever you are in the world and wherever platform you're streaming from, be it Facebook, a Zoom, or even YouTube, please feel free to always leave a like, ask your questions in the comment section. Let's have a very interactive session. We'll be looking to see your comment sections in the chat. And for every time you're understanding, please leave the W's in the chat for us, and we will be very delighted by that. So moving forward today, here are three major things that we're going to really be looking at just for the response and for the reason of time. First of all, we want to pay attention to what really moves price. Then the second thing we want to look at is how really is opportunity created. And number three, which is where I would, summon my strength to speak more on, would be the trader's job. But for number one and number two, I'm going to be leaving it to Manesh and Kaza, where we're going to be looking in depthly at how these things really play out. Okay, so I did put out a few things on the PowerPoint for us so that we would use them as a guideline while we're having these discussions, and also the viewers can have something to view as well. So I said, what really moves price? I from my own little knowledge, I said price moves because of imbalance. Buyers and sellers are never equal. Price moves towards the stronger side, and candles are a result, not the cause. Some people sometimes think candles are the reason why prices are moving in that direction, but we know at the end of the day, someone has to be willing to buy for someone to be willing to sell. The market is price and demand. So, with that being said, I also left like a small quote that I usually like to put, which is every move starts when one side loses control. So, at the end of the day, one person has to lose control for another person to gain. So, I think I want to introduce Manesh to the first session of this call because I believe that you've experienced the market from different sides. You've seen the market as a retailer, you've seen the market as an
Yep.
institution, and I, for one, have an understanding that the way prices move for retailers isn't really the way institutions view it. I mean, it's the same movement, but different point of views or angles. So I want you to
Yeah.
really kind of like break it down for us to kind of like see it. Then Kaza follows up and, have like an input to it as well. But we'll start out with you, Manish.
Yeah, I mean, I think we said this before. To create a market, you have to have a buyer and seller.
Mhm.
We've made this statement a couple of times in some of the podcasts where, something's so good, why is someone selling? So you always
Yeah,
have to have two people to make a market. If you look at the types of people that are out there that are trading, you have machines now that are trading continuously, that are creating markets. You have retail people that are creating markets. You have the institutions that are making creating markets, and then you have
yeah,
fundamental traders that are creating markets. So there's various types of people trading this market now. Everyone's going to have a bias, right? There are some people are going to think, well, this is a buying opportunity. Some people are going to create a selling opportunity, and that's what creates the market. Also, some people are going to have a short-term bias along with a long-term bias. So things could move up short-term in one direction and then change direction in the other direction. So a lot of different scenarios that can happen in the markets and so forth out there. Institutions have a lot more money, but they think long term compared to short term. Whereas retail people now have little less money, and they think a little more short term. So if you're a beginning trader, you should always trade with the higher time frames, which is pretty much what institutions are trading at, because they have a long-term view. So that's one perspective there that you have, so with price moving and so forth. But you're always going to have an imbalance because human nature is one person's going to be one thinking one way, another person
mm,
thinks the other way. And
yeah,
you're going to see trends that happen because you have that follow the crowd mentality. So, if my friend's buying this stock, I want to buy it too. So I want to
mm,
participate with him. So you'll have that huge herd of people that go in and start following the crowd mentality. And understand one thing, when you follow that crowd mentality, when you're buying, someone's selling. So someone has a different viewpoint. So you have to be
mm.
very careful sometimes on what you do, and how you trade it.
Okay. So Kaza, Manesh said something, yeah, about institutions thinking long term and retailers thinking short term. But I just have a question, yeah, and I think you might be able to help me put it in a way that Manesh would understand it as well. So we see institutions using algorithms,
Yeah.
and these algorithms are like very, very fast and very swift. So when we say institutions think long term, how then do they still have algorithms that trade very fast for them? And how does that make the retailer on the other end? How does that affect, the market dynamics for the retailer on the other end?
Understood. Okay. Thank you, Manish, for the great explanation. And Ryan, I wish you well today. You don't have that kind of energy this
Yeah,
week, yeah. But
yeah,
basically, guys, so this week topic is actually quite deep. So it's not easy for me to simplify things, right? But maybe the algorithm itself created at the end of the day is not by the institution, it's created by the retail traders that want to make money fast, right? But at the end of the day, Manesh and Rayon, we first thing first, we need to understand the market, that what is the market dynamic actually. The retail traders understand the market dynamic is about signal. When
yeah.
people giving buy, when people giving sell, that is the reason why a lot of retail traders has a lot of Instagram, I mean Telegram account just to give buy and sell position. So maybe from my side, instead of talking about signal, we need to talk about the market dynamic, the real game beyond or between the buyers and the sellers, right?
Yeah.
So because we need to understand that the price doesn't move because the chart has decided to move, right? Because like Manish said, uh, the movement of the market is included by the buyer and the seller, right? So without both of them, the market will not move. And price move because the market is constantly doing only one job, that is finding the next price where the business can happen. So in every candle, there's two questions being answered. Number one, how much buying is accepted, and number two is how much selling is accepted. So when one side become more aggressive than the other side, the market doesn't negotiate, it relocate. So that's why sometimes the market can be quiet for hours. We have seen, right, Manesh, Ryan, we see the market sometimes do the ranging movement, or we call it a sideways for all months, and suddenly in the next 1 day or 2 days, pump, spike up or spike down, right? So it is because the market has already decided that one side is more aggressive than the others, they will relocate. So it's not the market is not random. It just the market is shifting from agree to disagreement. We have a word here is agree to disagree, right? So retail traders usually get trapped because they treat price like a story.
Yeah.
So professional traders like Manej, they treat the price like a process. That's why there's a
Yeah.
lot of, algorithm, this and that. But you need to understand the algorithm that the institution use and the algorithm that we are using now is totally different. The retail
Yeah.
traders use algorithm that I can say for myself is way back 10 to 20 years ago. I but I've seen a lot of institution traders use algorithm or a system that they use to trade is like more than AI itself, right? So the question is, as a traders, we need to ask ourselves, or we need to know where the market will go, but we need to accept
Yeah.
if the market doesn't give it back to us, right? As the retail traders, we need to know where is the market is going, but the dynamic we need to know based on the sentiment. So I think from my side, that is the perspective of this week topic at whole, Ryan and Manish. Thank you.
Okay. Thank you very much. Thank you very much, Kaza, for that explanation. I think you answered it well. It's really the struggle between buyers and sellers that introduces the market dynamics. But when we also talk about market dynamics, yeah, I think there's another part of market dynamics that we also need to like focus on here, and that is that dynamics can change or shift relatively to um external factor outside the chart. So
Yes.
people sometimes think the market is just candlesticks, but it's really the dynamic is really as a result of external pricing for assets and commodities.
Yep.
So there's always an institution with a shit ton of orders, probably at let's say GBP USD, which is
Mm,
I think it's called the pound cable, yeah, the cable, and they probably have like they have like over a million orders at a
yeah.
certain price. In order for them to actually sell out those price, they need someone who is going to buy them off aggressively at that expensive price. So the dynamic of the market isn't just by traders, because retail traders think they move the market a lot of times. They think the $100, $200 we're trading moves the market. They
No.
think it's a responsible input in the market.
Yes.
But really what we are trading is just I like to call them the trickle of differences between the huge transactions happening every day. So the dynamic of the market is as a result of the buyers, and the sellers, and that aggressiveness that one side is actually winning the competition against the other side. So I just wanted to add that. Thank you guys so much. Thank you, Manesh, and thank you, Kaza. I just to ask, would any of you want to share a chart just to show like a thing or two, maybe on the, just a couple of minutes to just kind of show people how the market dynamic moves, and then maybe we move to the next item for today.
Do you want me to share a chart?
Yes,
Okay,
man.
sure.
Okay, give me one. Okay. Can you see my chart?
Not yet.
How about now?
No.
Uh, Still loading.
Okay,
Okay,
nice.
yeah,
I've seen
yeah.
it.
Now I can see it.
Okay, so this is just a simple price chart. This is Bitcoin and weekly time frame here. So you could see here that you have a price going down, 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 down.
Yep.
And then now you could see that we're just pretty much consolidating. So the buyers and sellers are battling it out.
Mm,
The sellers are not winning, but the buyers are not winning. At this point here, a lot of people thought right here, a lot of people thought the buyers were winning here, but then it phased off. And
yeah.
like you said, Ryan, earlier, external events can happen. And a lot of this could be Venezuela and Iran, everything that's going on, a lot of money shifting that can happen. And that did happen. Now the money's out of the country, going back to local currency. And that's kind of see what you're seeing here is the shifting down. So a lot of people here, retail especially, were thinking that this thing's going to go back to 100, 110 and start
Yeah,
making a move to retest these highs, but it didn't. There's a battling going on. And I think one of the things you said last time, Ryan, liquidity is a huge part of this.
yeah,
So, the liquidity also makes a big difference because if I'm trying to buy and the price is a lot higher, I may not be willing to buy at that price and so forth. So sellers I may be trying to buy at 100, but the first seller may be at 105. So that's the question. Am I willing to adjust my buy to sell at 105 or not? If I don't, then I'm sitting on the sidelines, and that creates illiquid scenarios in different periods. So right now, you could see there's pretty much a battle in Bitcoin right now between the buyers and sellers, and no decisions really being made at all for this. And if you go to a lower time frame, you see a different perspective. So this is a 1 hour. So the institutions pretty much are just holding on to it, not really doing anything.
yeah.
And sorry, for some reason it's slow.
Maybe because of the weather.
Yeah, we have a snowstorm here.
Yeah, yeah.
But it's not showing. But you'll see a different picture on a 1 hour, and it kind of looks bearish, where there's more
Yeah,
sellers than buyers. But that's a short-term basis because every bar is only 1 hour. So
yeah,
if you really want to get a good idea of what's really going on long term, you want to look at the weekly charts or the monthly charts, and then you could sit there and trade appropriately. But long term, right now, there is no bias for Bitcoin at all, and no matter what people are thinking. And you could see it's going up and down. And at some periods, you're having a lot of issues with liquidity too, which people
yeah,
don't realize.
Maybe, Ryan, can I ask manager one question?
yeah, yeah.
Yes.
Please, definitely
So,
go for it.
is it now is the best time to buy Bitcoin?
No, I mean, we
Because
talked
of
about,
we have seen the dynamic right now is what we call it as a fluctuation market, right? So it's been
yeah.
for how many months already? So if we are on the chart now, we have seen that the market is undecision, right? So
Hmm.
as a crypto traders, maybe you can give me or all the audience here few tips on how can we manage to have some some ideas of the crypto market.
Well, I
Essentially
mean,
the
for
Bitcoin.
for anything, you want to see, like, if you're consolidating and you're breaking out, you want
Yeah.
to see, let's take weekly time frame. You want to see 1 week of buying where you break out of the consolidation pattern,
Yeah.
right? And you
Mm,
saw that with this green bar right here. Okay.
Yep.
This is where everyone starts making assumptions, and
Mm.
that's really where you start losing a lot of money. You want to see 2 bars in a row follow through. If you don't get the 2 bars in a row to follow through, it's not going to move forward. It's fake, right?
Understood.
And this was a chance here. Bitcoin was basing, consolidating around 88,000. Then you finally had 1 week here where it closed above the previous week high. That was great. And then the second week, you needed to do that too. It started to, but then towards the end of the week, it failed. So it did not follow through. So at that point, it tells you that this thing is still fighting. They're still
Mm.
fighting to make this thing move up. But if you see
mm,
2 weeks in a row where you close above the previous week high, now you got a potential of starting a trend where a lot of people are thinking the same way, and now you're starting to see the actions on the chart and the pricing movement and stuff like that. Because it's fine, a lot of people think that Bitcoin's going to go to 150, but if they're
Mm.
not willing to put their money behind it and buy it, it's not going to go anywhere. And
Yeah.
that's what the
facts.
charts will do, is show you actions. So you really want to see on a weekly time frame to start a bullish trend 2 weeks in a row where you break, close above the previous week high. If you do that, or previous week low for bearish, if you do that, now you have a potential to start a trend, and you start seeing a bias that's really real, and you see one side starting to win over the other side.
Okay,
Uh,
so I would have loved to ask another question, yeah, Manesh. I would have really loved to ask another question, but for like I said, for the sake of timing, but I'm just going to talk about it in the next slide, yeah. So
Okay.
let me go back to just sharing my slide, yeah. So how is opportunity really created? How is opportunity really created? For me, I said buyers get trapped at highs, sellers get exhausted at lows, liquidity is taken before direction. This is my view on the market. This is how I approach the market. I don't chase highs and I don't chase lows. Instead, I wait for lows to be exhausted and I wait for buys to be exhausted. That is one of my easiest strategies when it comes to trading. I like to use the RSI and the stochastic indicators to kind of like map out areas. But nonetheless, I still like to pay attention to structure and I like to use the divergence on the RSI and the stochastic. I just gave out one of my trading strategies out for free right now. Yeah. But that being said, that being said, if we all three of us have agreed to the fact that the market dynamic is buyers and sellers. And where they are buyers, they are sellers. And where they are sellers, they are buyers. The only reason why the buyers outcompete the sellers in the market is as a result of an increase in demand. And the reason why sellers outbid the buyers is an increase in supply. Yes. So if we look at the gold chart, for instance, today, and we look at the gold especially, yeah, I know we might have like what do we call it? We might have like a very huge ton, yeah, of gold because it's a natural resource. So there are people mining it all over the world and everything, refining is going on and processes are going on. That is on the outside. Yeah, that's when we're looking at the external factor backing the commodity and the pricing of gold. But when we look at the technical factor and we look at the pricing institutionally within the institutions of the finance world, if everyone is buying gold, who's selling? So I just want to use that question to open up this part of it because we're talking about opportunities. So if everyone is buying gold, who's selling?
Asa, you want to start, or
okay.
you want me to?
Yeah,
I'll
our
start.
gold expert.
I'll start. Okay, the question is, if everyone is buying gold, who's selling? The question that you're asking now is basically we need to further back understand that who is buying the gold, right? So if you are talking about retail traders that buying the gold now,
Yeah.
they are not giving so much impact on the price of gold. But
Yeah.
if you see it in a much more bigger perspective, such as government, such as politics, such as with the price of oil right now,
Yeah.
if I can say that right now gold is the uh, on the verge of overextended level, right? Because the market is moving up and up and up without stopping. But if you ask me who, if we are going to buy and who is selling, the one that will be selling gold is actually a retail traders. Why I said to you like that? Because even though a lot of people are seeing the market in their platform right now is going higher, up and up and up without stopping, but there will be an emotional traders that will think that the gold will go down and they will do the movement that we said last week. We call it FOMO, fear of
Yeah.
missing out. So they will think,
Yeah.
oh, the price is going up already. So I think we can sell because the price has exceed the limit of this and that, the support resistance and so on. But they are not thinking properly as a professional traders that the market will not go with their mentality or with their emotional. So for me, if you ask me, Ryan, my simple
Yeah.
question is who is selling gold? I will say emotional retail traders. They are selling gold now.
Okay. Okay.
That's my what we call it,
Okay.
my true opinion from you because I've seen Ryan and Manish not in the world but in my country a lot of traders. I don't care if it's newbies or traders in TikTok. They are keep telling that gold will go to 5,000 and will going back to 3,000 in the next 6 months. And I laughing at them when I see their TikTok live and we say good luck to you because you are the one that are selling gold and we are the one that will buy it at the lower price. So that's the answer of your question, right?
Okay. Okay. Fair enough. Fair enough. I see your point, and I see where you're coming from. I'd like to hear Manish. I'd like to hear Manish's view on this.
Yeah, I mean, you have different reasons from different people, right?
Yeah.
From the retail perspective, people like, okay, this thing's gone up so much, so high. I see a lot of money in my account. I want to sell, take some profit, this and that. Typically, you start seeing the things around nice even numbers like 5,000 for
Yeah.
gold, silver, about 100 and stuff like that. From the institutional perspective, institutions have to report back to their clients. So they
Yeah.
have to start showing profits every quarter.
Yeah.
So you may see a certain percentage of their portfolio in gold or silver or whatever they may sell just to declare profits for their clients and stuff like that. There's
Yeah.
many different reasons out there, but if you look at what's going on right now, it's your supply and demand, like you said before, right?
Yeah.
Gold, if you notice, it's gapping up. And when you start seeing these gapping scenarios, there's buyers there, but the problem is the sellers are not at equal values. The
Yeah.
sellers are higher and higher and higher. They're not there, so at gold, let's say it's 5,100. A
Yeah.
seller may say, I'm only willing to sell at 5,200. There's no sellers there between it, between
Yeah.
5,000 there. So it's going up because now buyers are hearing everyone participate and they want to get in,
Yeah.
right? So they're willing to pay any price for the seller, and you start seeing these gaps here and there. But
Yeah.
everyone has different reasons for it. But you can't really find the complete reasons. But institutions do sell, and they're more for profit taking also. Also they believe that if something's moved 100% or 120% one year,
Yeah.
its life is gonna come to an end sooner or later. So they're
Yeah.
slowly gonna start taking some profits here and there, and they'll start shifting it to something else, where they're looking for more of a reward side compared to
Yeah.
something that's already gone up huge.
Yep. Like you said before, Manesh, on the retail trader's perspective, someone profiting is someone losing, right?
Yep,
So
yep.
this is what we are talking right now, because part of part of being a trader, one of them is profiting and one of them is losing. So that's how
Yeah,
Yeah.
the market dynamic works, right?
that's what's so great. It creates a market, right? If everyone thinks the same way, there's no market because there's no
Yeah,
sellers.
and the market will not move. The chart will
Yeah,
just stay like that, right? Because there's no buy and sell.
yeah. Controversy creates markets, and that's the
Very
best
true.
part.
Very true. Because I did a study one time on market behavior. Yeah, so I was taking a course on an online Harvard EDX on market behavior, and I realized that when you look at even game theory, I know Manesh and Kaza, you'll be very familiar with game theory. Yeah, you see that everyone wants a piece of gold right now. Like everyone wants a piece of gold. Everyone is rushing for a piece of gold. But for some reason, I'm looking at the prices and I'm like, if everyone's buying, who's selling? Because I know that the majority of the people pushing the prices are the retailers. They're buying up the hype. They're really buying up the hype. The institutions, the people with the huge, the institutions, the hedge funds, the banks, and all of these people, they already bought these things at a very low price. They saw it
Yeah,
coming. So, what's pushing the market via charts right now is hype, is retail hype. It's an outburst of excess liquidity into the market, and that's what is required to make the investments for big money actually turn into profits. So eventually someone is going to sell off. And and the sad part about it is I can't determine that, but I wish I could. That's all I've been thinking all through January. I keep asking myself, I wish I could know. I wish I was an insider trader that would know when a few of these companies are going to call big shots on gold because I want to be sat in it. Because I was telling someone, I said, the very moment gold would sell off, we would have one weekly candle cover up the whole of January. And it would happen so rapid. And the problem here is this, Kaza, what you said is people are already positioned for buying. Everyone wants to buy. So every shot they see, they are going to try to buy. And
Yes,
that's where the money comes in because they keep loading the market with more liquidity
yes, yes,
and you
yes.
keep making the profit taking easier. So it's just what I have studied with market behavior, especially in this kind of conditions. So people
Mm,
won't anticipate the sells, they would keep anticipating the buys. They will see every sell as an opportunity to buy. And every time they
mm,
buy, they're just going to keep getting stopped out. That's what's
yeah,
going to make the sell more interesting
yes,
because you've sat it's like a jet lag. You sit in the plane too long. When you
mhm,
come down, you think you're still flying. That's the
yeah,
same thing that happens to people. So a lot of people are going to get stuck in a trend lag. They're going to be so enthusiastic about the buys that they get lost in the buys. So their mind is just going to stay on the buys. So they wouldn't even see the opportunities for the sellers. And that's why
yeah,
profit taking for institutions are always very interesting. And that's how opportunities are created, really. That's just one way I think opportunities are
yeah.
created. So that's
And
why I asked.
may I say one thing, that
Yeah.
the situation of gold right now, Manesh
Mm,
and Ryan, is the situation right now is the same like the situation of cryptocurrency for the last 2 3 years
yeah.
when Bitcoin is at the lowest price. So
Yeah.
people keep trying to buying, and someone is selling because the price is going down, because
Yeah.
the one that are selling at that time is the one, the other people will buy the price, right? So the price
Yeah.
will keep going up and up and up. Even though right now the price of cryptocurrency is it's not at the lowest, but it's quite low at this time of years.
Yeah.
for the next 6 months, you can see the trend will change and the gold trend will change again for the next 6 months, right? Because the mentality of this is from the retail traders' perspective. They are thinking that if cryptocurrency going down, gold is going up.
Yeah.
This is what I'm hearing in a lot of retail traders around Malaysia, Indonesia. They said
Yeah.
they have the what we call it correlation, I guess
Yeah.
Yeah.
the
The
meaning, right?
correlation between
The
crypto.
correlation between crypto
Yeah.
and gold. But for me, even I've seen that. I've seen for the last 6 years. We've seen before in 2015 when crypto is going up, gold is also
Yeah.
going up at the same time.
Yeah.
It's not vice versa, right? So yeah, the situation of gold right now, personally for me, Ryan and Manesh, I didn't trade since the last October because of this kind of market. It's too dangerous for retail traders like me. But I do analysis, I do reading the fundamental side of the market, and I I think in the last 2 months, I've updated in my Instagram that the gold price will go at least by the end of this year in the price of 6.5 or 7. So what is your opinion, Manish, on that?
Casa, you're gonna have the gold chain on.
I do not I don't trade, so I cannot get the gold chains.
But
I mean,
but
Indian people philosophy is wearing all the gold, right? Buy it and wear
Yeah.
it. They don't believe in you
Yeah.
trading it; they believe in buying it. So you see all the
Yeah.
Indian people rushing to go to the jewelry
But keep
stores and
buying.
buying and decking out.
yeah.
Yeah.
And
No,
and
Kaza, I
that's
have a crystal
very
ball
true.
here. I have
Yeah,
a
okay.
crystal ball here. Ryan gave me his crystal ball
Oh,
to predict the
seriously.
future.
But
Look, I mean,
yeah,
yeah. I mean, as far as
that's my mm,
gold and metals are concerned, right? There's no way you could ever predict when things are going to end and stuff like that, right?
Yeah.
The way I'm managing my trades is I'm managing it off the daily time frame. I'm looking to make sure that, it doesn't close below the daily low
yeah,
2 days in a row and stuff like that. That'll tell me signal profit taking, but I'm just managing the trade there on a longer term time frame and staying in and riding it out, not thinking about it, not getting emotional about it,
yes,
not
that's
looking at the P&L about it. Because as
Yeah.
a trader,
that's
you want to be non-emotional. Ride
that's
the
the
ride,
difference.
yeah, ride
That's the
it
difference
until
between
it
you and me.
goes, yeah, yeah. Because I mean, I
That's
had
the
someone on TikTok tell me silver's gonna go to 200, and it was at 94. I'm like, okay, good luck. I said, I'm not willing to gamble it. I'm gonna manage the trade and see how far it goes, but I'm not gonna sit there and try to predict what the price is gonna stop at and stuff like that. I got better things to do than that. My goal in my business is to find the next winning trade, not
yep.
to sit there and think about the glorious dreams out there.
That's the
Every every
different
every every
mentality between institution traders and retail traders, Manish. That's the
yeah.
Yeah.
difference.
Retail traders, we do this thing where they say we buy the rumor. It's all a rumor.
Yeah.
That's all. See the person saying it's one of the things that we're kind of beaten out of time. But let me just say this. So one of the like major things here that kind of helped me like have like an insight, yeah, to how market works before I kind of like went into deep research study and certifications and all of those things was pump and dump. I don't know if you've heard of pump and dump coins. You notice that this coins really, a lot of people run into NFTs and coins and meme coins and without like good knowledge of understanding what crypto was all about. See, the idea of crypto was utility. It's all about
Mm,
utility. So I just started to notice that some of these meme coins really don't have a utility. Some of these NFTs had no utility behind them. There was nothing backing them. It was just rumor. It was just hype. And people would come into the market and they would hype and then they would push the prices of this thing. And then someone does a rug pull and everyone
yeah,
is gone. So that helped me really kind of get insight into how the market works. A lot of people just buy the rumor. They just buying prices outrightly just because someone said the prices would get here. And if we're going to be very honest, if not for like institutional prediction, we're looking at banks, we're looking at institutions, and we're looking at government trajectories, and we're looking at economics. If that wasn't the case, and we know that resource is a big thing now, especially in the age of tech development, especially silver, copper, and all of these things, and then a lot of uncertainties and safe havens for the gold as well. I would literally say one of the reasons why gold is skyrocketing was we had a lot of institutions set out targets for gold.
Yep.
From the start of 2024, we already saw likes of JP Morgan, already setting targets saying gold was going to get to 4,000 an ounce, gold was going to get to up to 5,000 an ounce. And now we finally see it. And if a well-renowned institution like JP Morgan, you know, and even what do we this guy's not Vanguard, my head, Larry Fink, also talking about gold getting to these prices, it's definitely going to move because these are well-renowned people. These are economists. These are people who everyone is going to want to buy the hype, even if they don't want to, even if there was nothing happening. Yeah, things like that would pull the market in. So I just think that retail traders, we find opportunities in fundamental conversations. We find opportunities in rumors, not just on the charts. Our technical analysis are good, but there are other ways that we also find opportunities when it comes to the market. And that was just what I wanted to add. There are different ways to find opportunity. If I personally had a good relationship with gold, my first entry on gold was at exactly at 2,819. That was my entry for gold. I'm just trying to imagine if I had gold, even if it was just zero point 0.1, I probably would be bagging over 100,000 USD right now with just zero point 0.1. But I'm not friends with gold that much. You get so yeah. So that's just what I wanted to say. Thank you guys so
Let
much.
me
It's always
let me
fun
make one
speaking with you
comment.
guys. Yeah,
I know we're short of time, but let me make one comment. The whole reason why a lot of people are in hype on gold and everything is that retail people do not diversify.
yep,
Institutions are going to have a small percentage of their portfolio in gold, so they never get emotional. But the number one
yep.
mistake, and it's been happening for years, is that retail people do not get diversified. They get stuck in one or two things, and that's why they become emotional, and that's where the hype exists. Sorry, I just
Hmm.
wanted to go for that.
It's fair.
That's
It's
the
fair.
that's the. I remember my friend telling me a few weeks ago. He said, "You like to think long term. How about we start looking at trading as an investment, not just an art of trading?" That's how
Yeah.
institutions view it. Institutions don't view trading as something they have to do every day. That's why they have a hedge department. The hedge department is responsible for, moving the market, all those small moves. But overall, they view the market long term. So that's very true. Yeah, so that takes us into what the trader's job is exactly. What exactly is the trader's job? And for me, I said a trader's job is edge observation. You know, you it's majorly observation as a trader. Yeah. Pattern recognition and risk management, not prediction. Like Manesh would always say, you can't predict the market. You can't predict the market. You speculate, you observe, and you attack. You make executions. And that's just what it always has to be. So observation is the number one job for the trader. Pattern recognition. And why pattern recognition are important is I came back to add pattern recognition actually because I thought about it. I'm like, if the market is a history is a sequence of historical event printed on the charts, and that repeats itself, and we also see the fractal nature of prices from a higher time frame to a lower time frame. It means that if you actually follow from a higher time frame on any given asset or commodity, you'd notice that there's a historical nature to that asset or to that commodity, whatever it is you're trading. And if we say price is fractal, it means that if you can recognize the pattern from a higher time frame historically, you would be able to see some sort of consistency back downwards. So that's why I said pattern recognition is very important. And we even see institutions having pattern recognition algorithms that help them spot like breakout patterns and all of those kind of things. And then the next thing with observation is it helps you identify who's in control, and then you also want to learn to wait for confirmation or excitement. And then we want to trade reactions. We want to respond to the reaction of the market, not just assumptions. So even if you have an idea where prices may be going to, it's important that we then, focus more on what is actually happening. What's the market showing us? And I also left a very good, what do you call it? A very good advice as like good traders spot opportunities, not chase them. Like Manesh would always say, you want to find the opportunity, you don't want to chase after it. And when you find the opportunity, that's where you as a trader sit back and actually decide if this is worth putting your money into or if it's not worth putting your money into. So that's just my own advice and what I think the trader's job is. So we could just, give a few inputs here and there, Kaza, Manesh, before we call it a day.
So maybe I start first, Manish.
Yeah, go for it.
So the trader's job is for me as a retail trader, your
Yeah,
job, first thing first is your job is you need to understand the market. That's your first job. That means you need to learn to understand the market. Your second job is to understand your emotion correctly. And number
yeah,
three, your job is to protecting your decision quality. Because a lot
mm,
of retail traders, they do not have the quality to make their own decision. That's mean they always do prediction. And prediction is the weakest skill in trading
yeah,
because even if you predict correctly, one bad execution can destroy you. So the real job is, as a traders, your job is like to operate yourself as a risk manager first before you became a trader, right? So
yeah,
maybe Manish can agree on this. Professional traders don't trade to be right. They trade to be consistent so that they can be a trader for a long, long time.
yeah,
Retail traders, we can see a lot of retail traders, they become a traders for 1, 2, 3 years and then they're giving up on themselves and then they say a lot of bad things to forex trading and they left to crypto market or stock market or whatsoever. So the one job that the retail traders need to do is protecting their decision quality because Ryan said and Manish said the trader's job is not to catch every move of the market, but the trader's job is to only participate in the market that give us an unfair advantage. So hopefully, my advice is simple. You don't enter when you are excited. You don't size up your lot size when you are emotional, and you don't trade because you are bored. Because there's a lot of retail traders that are trade because they are bored. So yeah. So I think from my side, that is my advice, and that is the the trader's job that I see in nowadays traders. So please, Manish, next.
Okay. Trader's job, simple. Make money with no emotions, right? And the best way you could do that is, believe it or not, is look for a failure one side and go the other way. And let me explain what I mean. If you're looking to buy something, before you buy it, as Ryan said, don't buy it at the high. Look
Yep.
for a failure to the other side. Look to see where sellers are trying
yeah,
to sell and they failed. Once they fail, then look for a buy. So I always look for a failed setup before my actual entry, which is opposite. So I always look for that scenario before I ever buy. Okay, so I don't look for a buy where buyers were buying and then buy. I look for a sell where the sellers failed to take it down and then I buy. And if you look at that scenario, you have a higher probability of success. You're not following everyone else and you're actually doing have a greater success doing that.
So
thank you
yes.
guys so much. That just kind of like sums it up. Hope I'm not breaking. Am I breaking?
No.
Nope,
Oh, okay,
you're
okay.
good.
So that literally sums it up, and I hope everyone watching today actually had like a lovely time understanding this thing because people always get it wrong and they just think it's always about candlesticks. like I would always advise people, try to look at the market way deeper than it is. Sometimes it might drag you into a bit of a mayhem, yeah, because you might get confused and you start to doubt everything you see. It might slow down your execution. But I promise you, if you want to stay long term in the finance world, you need to view things outside just the numbers and the candlesticks, and you have to look a bit deeper to really understand what is. Just by the way, if you guys are wondering why I ran out, I needed to go empty out my bladder. So thank you guys. So next thing where I'm going to just talk about quickly. This is just something I have been keeping to admonish each and every trader throughout is, this 2026, and I believe this year you want to be more disciplined about it. Yeah, not just excited. A lot of people get excited, new year, new me, new this, I'm going to do this. But in order for you to achieve things, you need to have a goal, you need to have a plan, then you need to have, okay, you need to have a dream, something you want to achieve, then have goals set for it. Then each goal should come with a plan. So basically, you need structure. Yeah, not just being excited about the year. So, what can you do differently in your trading this year? These are the three things I always ask myself. What do I need to stop doing? Okay, what will I stop doing? What will I refine and not replace? Sometimes you don't need to change. Sometimes you just need to work on it. It just needs a little bit of a touch up. And what rule would you never break again? For me, one rule I'm never breaking again is if I'm busy, I'm not trading. Simple. I've had too many losses busy and trading. Yes, if I'm busy, I'm not trading, except I'm actively on the chart and I can see the chart. So just think about this and ask yourself, if you're in the audience, you're watching wherever you're watching from, Asia, Africa, the United States, Canada, Antarctica, if possible, as well. So please, pay attention to these things and work on them. And it's been amazing having you guys so far on the live. Please don't forget to hit the like button, subscribe, and also, turn on post notifications so you're notified when there's another live upcoming as well. So here are my three key takeaways for today, just as if I knew what Manesh and Kaza were going to talk about. So, number one is market dynamics explain why price moves, not just where. That Manesh made very clearly to us. It's not just about where the prices are moving to, it tells us why exactly prices are moving there. Number two is observation beats prediction in every market condition. And just like Kaza told you, prediction it's the it's the least thing, it's the worst habit you can have as a trader, because the moment you set your mind to predict, not speculate, then you're constantly going to think you know where the market is going to and you're going to chase it instead of looking at the market for what it is. And then my own is opportunity appears where dominance begins to shift. And that's exactly what I'm saying. And right now, all of you are saying buys on gold. Let me just tell you guys a little secret. I'm actually day trading gold right now for shorts. Kind of like I'm scalping it. I'm scalping the shorts actually on gold, but
Good
it's
luck.
not it's not like the main move for me. It's not like the main move for me. But yeah, I believe that dominance has shifted on gold to the buy side, but that would also introduce, sellers to come into the market because they are way overpriced at the very moment. And there would be need for some people to take profits off the market too as soon as possible. And hopefully we see the profit taking happen gradually, where we can have some sort of at least a media bearish correction. So probably we can see like a bearish pattern form on that daily time frame before continuation of the buy sides. That would help to, I believe that would help to kind of rebalance and restabilize the pricing for gold in order to bring in more buyers properly into that. So that's that for us today. I want to say a very big shout out to Kaza. Thank you so much, Manesh, for um, joining the live as always. And hopefully we would talk later on to see how we can bring in more guests, from each region. Maybe a guest from your side, a guest from my side, and a guest from Kaza's side too as well. So we can have like a more field time, and probably we could even play games. Probably we could play some trading games and trade live for people to see once in a while if we can. I don't think we might be able to, but we might be able to do something like that. But we'll talk about that. And thank you guys so much for joining. Sorry my energy has not been as lively as it always used to be. I'm still recovering. So hopefully next week I'm able to do better and come with as much energy as I used to. So thank you, Manesh. Thank you, Kaza.
Thank
And
you.
it's bye bye from Ryan and bye
Bye
guys.
bye.
Don't forget to like and
Hope you feel
subscribe.
better.
I thank you so much, guys.